Reserve Bank's monetary policy is due on August 10, and this time tomatoes are likely to hijack the policy. As always, CNBC TV 18 Citizens Monetary Policy Committee meets ahead of the RBI MPC to discuss what should the rate policy be. Joining me now are Sajid Chinoy of JP Morgan, Soumyakanti Ghosh of SBI, Shamiran Chakrabarti of Citi, Sonal Verma of Nomura, and our chairman, Dr. Pranab Sen, joining us from New Delhi. Gentlemen and Sonal, thank you very much indeed. Well, you know, tomatoes will figure in the discussion. So, Shamiran, let me start with you on that. Our poll threw up a number of 9% food inflation for July and maybe 6.5 or 6.6 for headline. How worried should we be about food inflation in general?
So, Lata, I mean, obviously, tomato prices are it's in everybody's mind, but at least across the vegetable basket, the 11 vegetables that we can track, there has been a significant increase for all of them.
Oh.
So it's a generalized vegetable price inflation. We have, on a month-on-month basis, the vegetable price inflation could be 35–40% as well. So, and because it's not showing up as much in onions and potatoes, a little bit there as well. Probably we are not discussing it enough. But the good news is that beyond vegetables, the rest of the food index is still doing reasonably okay. Mm-hmm. And it has not yet passed on to the non-food core part of the index.
There was a scare on rice and pulses, no?
I mean, there is a very small increase, but it's more the narrative which is worrying on rice, edible oil, etc., where going forward there could be price pressures, but at least for this month's data, that's not really the scary part. And there is the disinflation process on the core, which is continuing as a part of even global trend. So altogether, we think around 6.8 type of a number is possible headline for July. But the key question is that how long would these prices stay elevated, and would there be at all any impact on inflation expectations, etc., which generally are sensitive to things like vegetable prices?
Will RBI raise its inflation forecast for the full year?
It is mechanically they will have to raise the number because if you have 2-3 months of much more elevated print, then the average will obviously go up. But the critical question would be that whether they will change the 9 to 12 month ahead inflation forecast number or not, particularly because this quarter next year would have this in the base, and it could mean a significant drop in inflation as well.
You referred that core inflation is softening. Yes, from January 6.2 or thereabouts, it's come down to 5. But Soumya, now fuel has started rising. It looks like global commodity prices are kind of ebbing out or bottoming out. Do you think we will have the core inflation fall for any bit longer? Should we worry about inflation more generally?
Yeah, no, I think, Lata, just taking from Shamiran's point of view, I think we now have a paradoxical situation of find. All this through we have been talking about a sticky core, and the gap between the core and the headline inflation this month could be as much as 150 basis points, if not more than that. In the past also we have seen that 150 to 170 basis point has been the gap. But the larger question is that whether the core could be sustained at that level. I think below 5 is difficult to sustain, but possibly given the current trends in core inflation, I think it's possible that the core is sustained below 5.5%. And the other important point is that food prices of course are a point of worry, but the larger question is that there has been studies in India and which says that headline converges towards core. So if that is the case, and that has happened in the past also, so even if core stays below say 5.5, so headline inflation, which actually excluding vegetable is running at around 5.2% for the last couple of months, I think if that is the trend, we should not worry too much as of now, even though the inflation numbers for the next 2 months could be a little bit ugly.
Okay. I'm still, looking at growth numbers globally, which seem to be surprising on the upside, at least in the US. So, Sajid, if you can just give us the global elements that RBI would watch.
Sure, Lata. This is a theme we've been discussing for 6 months now, right? And the point I've been making repeatedly is this time has been different globally because there's an element of global resilience that hasn't been fully appreciated. Both the fact that balance sheets in the private sector are much stronger households and corporates. And the fact that everybody focused in 2023 on the rate hikes, what they missed out was there was another thing happening. The adverse supply shocks from previous years were unwinding, and that was helping growth and disinflationary. Bottom line is that I think there are three things to watch globally. One is more resilience. First half global growth is tracking 2.7% above trend. That resilience is showing up in growth, it's showing up in labor markets. That has meant that markets have begun to price out a near-term recession and the rate cuts that come with it. One of the reasons why the US 10-year was at 4% even a month ago, much before the whole Fitch episode, right? Number two, you're seeing that the lack of a near-term recession prospect means commodities are inching up. Oil is now back at $85 a barrel. So the first thing will be on rates and commodities, but there are two important other elements to keep in mind. A sectoral shift where you're getting services may slow, but we may go back to manufacturing picking up in the second half of the year. There's a restocking cycle underway. Tech has bottomed out. Final goods consumption is holding up. And so if you see that rotation, again, away from services and towards goods, that may put a floor on the global goods disinflation. In fact, you may get a little bit more goods inflation later in the year. Okay. The third element and the final one is US exceptionalism. We're seeing Europe is disappointing, China has disappointed, but the US is holding up. And all else equal, that means a stronger dollar, which we've begun to see the last few weeks. And a stronger dollar, therefore, puts some pressure on emerging market currencies. So there are these three things going on. Commodities may be slightly higher. Interest rates around the world may be higher. Central banks higher for longer. The dollar may strengthen a little bit because of US exceptionalism. And there's a flaw on the goods disinflation because of the sectoral rotation back from services to goods.
Okay. Sonal, a similar question to you. Are the global impulses actually likely to keep the Reserve Bank more cautious and hawkish and not dovish? What are your thoughts?
I think as things stand today, there have been two, I would say, like main developments and still progressing. One is, as Sajid was mentioning, in terms of US resilience. And one thing that stands out is the current narrative of soft landing or no landing, because this to us is not a steady state. Either growth is so resilient, as Sajid mentioned, that there's going to be a reacceleration of inflation and therefore Fed needs to do more, or we will finally see the transmission play out and labor market weakens and growth slows down. So in our mind, one of these two scenarios is going to play out. Near term, it does look like disinflation should sustain, but over the next 6 to 9 months, we actually think that the lags will play out and the credit standards are tightening, as we've seen with the senior loan officers survey. So that spills over into business investment and eventually into the labor market. So our view is the US exceptionalism is not going to last for very long. So that is one. I think that's, from a central bank's perspective, given the uncertainty, central bank needs to be prepared for either of the scenarios. Okay. And second is on China, we are hearing a lot more in terms of stimulus measures for consumption, property, infrastructure. We've seen some measures, I would say not enough to convincingly say that the investment and property cycle will turn around. Of course, if it does, then it would permanently put a lid on commodity prices in terms of flow. If not, then there's also a risk that commodity rise may not sustain. So I think there's tremendous amount of uncertainty right now in terms of the direction of global macro. And in that environment, from a policy perspective, whether it's the forward view on growth or the forward view on inflation, I think we need to be prepared for all scenarios right now.
Okay. So more likely the RBI will stay pat because you don't know which way things are shaping up. But those questions later. Dr. Sen, if you can put all this together, are you convinced that growth is a little stronger than expected and inflation a little higher than expected? What should the Reserve Bank and the MPC convey, hawkish or dovish?
Well, I think there'd have to be a lot more nuance than that. And, as I think everybody has really said, there is a lot of uncertainty. There have been upside surprises, but the vulnerabilities of the global economy continue to exist, and we don't know how they're going to play out. But as things stand, the RBI really is facing two challenges which they're going to have to deal with. The first, of course, the obvious one is the vegetable prices. And the question is, to what extent will this actually sort of influence inflationary expectations in the country? That's one clear one. The other one is the uncertainty that's going to be around the exchange rate. At the moment, the trends seem to indicate that the exchange rate will continue to weaken, which means that there's going to be an upward pressure on inflation from the external side, despite, regardless of what is happening to global prices. So these two, I think, are going to be there at the top of their minds. Now, there are, of course, upside surprises that can happen, but that is something that the RBI can react to if and when it happens. So at the moment, if I were them, I would play it very, very cautious.
Cautious, I would assume that that would mean somewhat status quoist. In fact, that's the feeling I get from most of the people I talk. Better not do anything. So what we have to really concentrate on, how will they sound? Will they sound hawkish or dovish? Those questions after the break.